Hello, everybody. So now is the last session of this amazing week we spent all together for this Insurtech Latam Forum 2020, organized with IMS and Digital Insurance Latam. So thank you very much for the 1,600 people that participate to this amazing event. Right now, we have the most important keynote of the week with our great friends Rob Collins in order to talk about uh, Asiatic or Chinese insurtech ecosystem. So don't forget, you can ask what you want to our friends Rob Collins after the talks, after the keynotes. So do not hesitate to send by chat your question. We will ask a lot of things about Chinese, Zhong, Ping'an, and everything. So if you agree, we can go ahead with the talk of Rob Collins. I don't know if Rob Collins is with us from US. And before Rob is connecting with us, after the keynote, okay, after the keynote, Matias Gorgio will talk with us too. Go.
A warm welcome to you all. My name is Robert Collins, and I'm happy to be your guest speaker today. By way of introduction, I'm the CEO of Cross Border Insurance LLC. I'm based in the US, not far outside of Chicago. I've had the very good fortune of being able to be directly involved in the insurance industry in China for nearly 3 decades. I've had the privilege of living in 3 of the most vibrant insurance communities in North Asia. I've had the pleasure of living in Beijing, Shanghai, and Hong Kong for approximately 22 years. So with that, let's begin. The name of my presentation today is Learnings from Asia for LATAM. So let's get started. So today's presentation, we're going to talk about 5 main topics, and they include China, big tech, and ecosystems. We're going to do an update on Zhong. We're going to talk about key lessons learned from Zhong. There's 5 of them. And then we're going to talk about what's next in Asia. And then a quick look at some of the key players in the market, as well as looking at 2 markets themselves, so both Hong Kong and Singapore. So with that, let's get started talking about business ecosystems. And it shouldn't come as any surprise that China is the leader in developing ecosystems. If you look at the fastest growing region in the world, which is Asia, but pre-COVID that is, you can understand that the 3 key drivers of economic growth, the top 3. The top 3 are logistics, e-commerce, and fintech. Fintech to be inclusive of all technologies related to finance, including insurance. So it should be no surprise that a company like Ant Group, which is a major e-commerce player, right, and logistics player as well as fintech player, it's no surprise that they are really the largest growth engine for ecosystem scaling in the world, right? So mobile payments really were the key driver for Alipay. Alipay was born in 2004, and here we are, 2020 rather, and IPO for Ant Group is coming up before the end of the year. And they're expecting to raise roughly 35 billion US dollars at a valuation of close to 250 billion US dollars. That would be the largest IPO ever in the world. So Ant Group has got this sprawling financial services ecosystem. And again, you must keep in mind that they have various different components to their business. As I mentioned, they're a huge e-commerce player, a dynamic logistics operator globally, as well as their financial services arm. But you can see that just the sheer breadth of their financial services ecosystem inclusive of credit and payment and wealth management and SME financing, consumer financing, including their insurance platforms, which are all tucked under the Ant Insurance Services business unit. So one of the more interesting things about ecosystems is how the Chinese have embraced them, right? And because when you think about the Western companies, they tend to manage, vertical markets. It's very unusual for an insurance company to become a bank, right? It's just not normally accepted practice. But the Chinese are very comfortable in expanding their business horizontally, where Western firms tend to stay within their verticals, right? So this is a very unusual phenomenon that's only developed in China in the last 7 to 10 years, but really started to take off in the last 5. And so we're take a quick look at Ant Group, and you can see just outside of their e-commerce business and outside of the logistics business, they have 4, lateral businesses that I've represented here in this diagram: asset management, lending, online payments, and of course, insurance. And these are just examples. In the insurance example, they're talking about Shanghubao, which is Ant's highly successful mutual aid healthcare plan, which we'll talk about in a little while later. But as you can probably appreciate, the fact that the Chinese can expand beyond their core business, as I call it, they have this appetite for core and explore. And not too many other global markets have that voracious appetite to embrace new businesses, right? As the Western mindset is such that we should stick to our core business only. Next, we're going to take a quick look at, by the numbers, Ant's ecosystem. 1 billion users of Alipay powers the growth, right? And you can see that the monthly active users for Alipay are about 711 million users, roughly 2,000 financial partner institutions as part of their ecosystem. And within this, they've got close to 729 Alipay app digital finance active users. So as many users there are to the app, are as many financial participants as well. And then lastly, in respect to the bottom right of this summary, in blue, you can see that the Insurtech premiums, 52 billion RMB, that roughs out to about 7.5 billion US dollars. This is a very large number, and honestly, there were a lot of people that were surprised that their Insurtech business was larger than most of their financial services and lending business. And we only recently found this out through the recent IPO prospectus. So it was quite a shock to a lot of us market watchers at how vast this insurance machine is. So that was a quick look at Ant Group. I'm still getting used to the new name. Now we're going to switch gears a little bit and talk about another highly successful Chinese firm, the one that's started its core business in insurance and built out an ecosystem horizontally. Ping An is a fabulous institution headquartered in Shenzhen, China, in the south of China. This is a quick glimpse of their 88-story new world headquarters. So here we are. So really, we must give Ping An full credit for being able to move beyond insurance to develop a very vibrant ecosystem. And the diagram on the left really explains, how they look at their business. And first of all, the reference to this one positioning in the top left is their single view of all their ecosystems. There's one entry point for all customers. So the customer has access to all of the ecosystem if it wants to. So underneath this roof of Ping An's ecosystem, they really look at it in a very interesting way. They've got, and PAN, by the way, stands for Ping An. So PAN financial assets is really the financial side of the house. Then they took a very different new ecosystem for them in respect to healthcare. And they split it that way, which I find fascinating. So they consider this as two growth models. The growth models are broken out by finance and technology as technology being the driver, right, for growth. But on the other side of the house, they look at the finance and ecosystem, the ecosystem being the key driver for growth. So it's finance and tech, and it's finance and ecosystem that are driving new growth for Ping An. And then the N pillars, or the number of pillars that are really the foundation for this platform, this ecosystem, everything sits above it. But they are on the left, on the finance and technology side, insurance, banking, asset management, and on the finance and ecosystem side, it's financial services combined, healthcare, auto, real estate, and home. So that's sort of how they're structured and how they look at it. As they present it in a different way, and it's very common for the Chinese company to express their ecosystems in sort of circular flows, if you will, because they do interact with each other. They sometimes are overlapping, right? Especially in segments that we're both involved in, insurance, and then their auto ecosystem too. They all interrelate. So at the very center of their ecosystem, you see the five different silos, if you will, that operate within this, and the separate other ecosystem partners that come in place, the real estate, the auto tech, smart city, and then fintech off to the right. It's enlarged only to sort of further explain that the aim is for each Ping An ecosystem to have an accelerator embedded within the ecosystem to spur further growth. And it's a very interesting concept that they break out their business by ecosystem, and within each of the ecosystems, they build in an acceleration model to look at all new opportunities for growth. It's sort of a fascinating structure, actually. And then the other thing that they've become adept at as they've moved horizontally, with their ecosystems plays, it brings new requirements for servicing, right? I mean, they're very adept at understanding the insurance market and how you service, insurance clients. But when you're breaking into a new, vertical ecosystem such as healthcare, you have to be able to, perform functions online and offline, just like you would be in insurance, let's say. But that required Ping An to think outside the box in terms of how they structure these new ecosystems in ways that have never been done before. And so what they've done is they've successfully embedded products and services, both in the online world, but also to the offline world. And this is an important concept to understand because, as the first bullet point refers to, O2O stands for online to offline. Think of it as the sort of last mile that you need to complete to move from the virtual world to still service your customers in the way they choose to be served, meeting their unmet needs sometimes in this case, and how they go about it. So this is all part of their health ecosystem, this O2O, and embedding the online to offline model that they follow. Ping An Good Doctor is the vertical involved here. It's a phenomenal healthcare service provider, from consultations to internet hospital meetings with doctors and nurses to outright help when and where you need it. And so the picture here represents this O2O sort of representation where users can go to their kiosk or telehealth booth, if you will, and do consultations online in real time. And this is all activated by AI, and it's just a phenomenal new way that Chinese can get local healthcare when and where they want it. So fascinating development for Ping An on the healthcare side. Tencent, the third leg of the stool called BAT, Tencent, is also very active in insurance as well. Probably the second most active Chinese tech company in insurance. They've done a tremendous job in focusing early on in Insurtech, and we'll get to the story later of how both Ping An and Tencent and Alibaba all got involved in Zhong early. So recently, only less than 3 years ago, Tencent formed a digital insurance agency called WeSure, with already 100 million monthly active users. It's got 20 plus insurers it supports. And in less than 3 years, they've managed to develop a $48 million in commission revenue to WeSure. Like most relationships between insurance providers and platforms such as Tencent or Alibaba or even Baidu, you know, the real power of the ecosystem and driving new sales is really driven by leveraging data, right? And when you have a partner, WeChat, that has 1.2 billion monthly active users, you've got a bucket full of data that you can help use to drive sales, cross-sell, drive risk management profiles, drive marketing profiles, etc. Never mind locations and transactions, shopping or whatever you can imagine that happens on these messaging apps. And the winning formula is quite interesting. I had the good pleasure of having to have fireside chats in the Insurtech Connect recent world tour. And Alan Lau was kind enough to join me. We had a pleasant 15-minute conversation. And one thing he told me is that the WeSure insurance agency generates a considerably lower loss ratio on its business than a traditional insurer's portfolio of business. He told me that the loss ratio averages 50% lower. His portfolio that he provides to insurance with 50% lower loss ratio than what a traditional insurer would get on normal business, which is just phenomenal. So again, the segmentation opportunities, the AI profiling, cross-selling, it's just, they have the ability to really refine their target segments and who they want to attract. Now we're going to switch gears a little bit and just do a quick update on Zhong. I'm going to start with their history, actually, because it's important to understand how the formation of Zhong took place. You know, at the very beginning, we had the so-called three Ma's. They called them the three Ma's because each of the gentlemen that you see in the picture all have the same surname, hence the three Ma's. And here is a picture of captured them when they launched Zhong online insurance in Shanghai. Obviously, China's first online insurer was a fairly big commitment at that time when even these three gentlemen really didn't know what to expect as they partnered in insurance for the first time online. But it's quite interesting, too, that they still remain shareholders, although Zhong's outsized IPO in 2017 certainly diluted their shares, but they still roughly have shares in Zhong of between 8 and 10%, which certainly gets them a seat at the table and gives them a strong showing in Zhong future activities. It's interesting that when I've tried to rough out how much business Zhong obtains from these the three original shareholders, it's roughly between 30 and 40% as much as I can discern, which is a pretty darn big number. One fun fact of Zhong that's little known is the fact that they are the largest insurer in China by number of customers and policies sold. And it's really driven by their overall strategy in terms of segmentation and largely the way they structure their product offering to their audience. So 1 out of 6 policies in China are now sold by Zhong. I'm not going to spend too much time here, but I just want to frame this in the way, and this is Zhong's view, the incumbents, what the insurer's reality is, and how that creates an opportunity for Zhong to disrupt the marketplace. And there's nothing really new in here. The material obstacles to online expansion, every incumbent has these hurdles, if you will. Then the frustrating customer experience is a little bit more unique to China, and I'll come back to that one. And the incumbents being focused on other priorities, well, this is true in any market where we operate. So there's nothing really different in China that makes that stand out. But in China, frustrating customer experience is more of an interesting phenomenon in that, when we're looking at this market, this is a mobile-first, digital-first marketplace. It's basically a cashless society. And the millennials don't know anything different but that buying and transacting and communicating and banking and financial services online. They don't know any difference. So the incumbents are really in a disadvantaged position because the younger generation, and we'll talk about why they are such an important segment to look at, you now can appreciate that the main drivers, this young generation of users, are really very much aligned with the disruption that Zhong has presented to the marketplace. So Zhong's activities for 2020. So they've gone from 7 to 5 ecosystems. As you can see in the diagram, the health, consumer finance, auto, they have a ecosystem bucket called lifestyle consumption, and it really designates consumption of goods and services. So think ride sharing platforms, think e-commerce and online sales, etc. And then the last major ecosystem is travel. And then with the segments as they break them down, fintech is still very much a large portion of their business. Insurance dominates, Insurtech, but fintech does remind, and it's mainly now reserved for consumer finance, but still finance is very much a play for Zhong still. In respect to the 2 new licenses, in 2020, Zhong received a new virtual license in Hong Kong in the banking arena, and they also won the first of its kind virtual life license in Hong Kong as well. So they've got a lot of activity ahead of them in the virtual world in the Hong Kong market. They've been pretty busy at it. In the first 6 months, the virtual bank license alone recorded in excess of $300 million in new bank deposits. Just a phenomenal result. These virtual licenses, much like the first Zhong license, which essentially was a virtual license, internet only, if you will, they are not allowed to have any physical branches but for the HQ, hence the term virtual. Expansion, Southeast Asia expansion continues. We'll talk a little bit more about that later. And they're exporting their technologies, which is, they've been doing this now for about 2 years. The good news, the major change in profitability was in 2020, in the first half year. They actually made a fairly substantial profit. We'll go through that in a little bit too. So moving on. So the profitability picture based on annualized sales of $2 billion, so $1 billion in the first half of, and that's dollars, of course, first half this year, pretty darn good performance on the sales side. And as you can see, roughly 490 million net profit for the year, half year rather. That equates to about $60-70 million in profit. Pretty darn good. for a firm that's been going for 7 years trying to find profitability. It's not been an easy journey. Everybody thinks Zhong's got all the tools and the most wonderful technology to make it happen, but it's a new industry and new technologies that they're only continuing to refine. Combined ratio of 103.5, and with total investment yield of 3.6. Their combined ratio after investment just sneaks under the wire at 100%. We're going to spend some time on this because there's some very interesting takeaways from Zhong. So this part of the presentation is about what can we learn from Zhong, and they're really the lessons learned, and really some of the personal lessons that I've taken away from Zhong I'm able to share with you today. So one thing is exceptional with Zhong, and that is everything is digital, and everything that is digital equals competitive advantage for Zhong, unlike really any other player in the world, correct? So, and it's their tech stack, this modular core business system, right? They've spent an enormous amount of investment into the ABCD powered platform. They continue to invest outsized amounts. And if you look at the investments that the likes of Zhong and even Ping An continue to shovel into the business, it is just outstanding. And so these data-driven insights create competitive advantage too through AI, et cetera. They're able to move, especially in the banking business now in Hong Kong, they're able to use their blockchain modular system to help with privacy concerns. And then in their movement to Singapore for their export of their technology, they're able to use their cloud computing to move existing systems and tailor them for the local market. And of course, data to help drive all of the above. And one of the other differences or differentiation that Zhong brings to the table too is service innovation. And there's not a lot of people that are talking about service innovation. And in one area of the business model of Zhong, where it really stands out to me, is in customer service. And if you contact Zhong via voice or through the internet, you are being serviced by a chatbot. Not only are you being serviced by a chatbot, but the chatbot that Zhong has built using AI and the other tools we've talked about, it handles 97% of inbound customer contact. I mean, it's just a phenomenal number. And then, of course, with this technology-empowered, platform that they have, the scale that it allows to give them, especially when you consider, as we've talked about, some of the amount of data that they're using, not only in, sifting through profiling and data for reaching the right customers, but just the sheer number of policies, because they're doing small ticket, type insurance. So the system supports 480 million existing customers now. Zhong existing customers, a number close to 500 billion. This is phenomenal. And so sorry, 500 billion, my apologies. And then, of course, they can power 8 billion policies a year. That's their annualized policy issuance online. And then, of course, and the most interesting one to me is the amount of policies they can issue per second, being 32,000 policies, up from 25,000 in 2017. So just a phenomenal, empowered technology platform. The second lesson learned for me is to keep your eye on the big prize. And the big prize for Zhong is data. And it's not only data per se, but it's data from the most important targeted segment in Insurtech for the China market. And because Zhong works with some of the largest ecosystems, Chinese ecosystems that we talked about already, from Ping An on the auto side to Alibaba on the e-commerce side, Zhong'an's focus on millennials runs very strong. And if you think about the incumbents operating the market, they're burdened with older clients that don't lend themselves well to technology, whereas Zhong'an's customer base, as we see in the third bullet point, 60% of Zhong'an's customers are millennials. But here's the important thing. The millennials, those under 35 in China, 35 years old that is, account for 65% of China's GDP growth. 65% of consumption is driven by millennials. And I can tell you that Zhong'an certainly has its eye on the big prize in terms of data from millennials. The next lesson learned for me from Zhong'an for me was really Zhongyung's very unique focus on micro premium as its pricing model. And with this, I've titled this slide, they're able to reach new consumers with micro premium pricing model, which is very different from any conventional activity we're seeing with insurers anywhere else. And so what this really does is create repeat purchase product. So think of some of Zhong'an's products being bought continuously. And we'll look at a couple of those later when we talk about flight delay and return shipping. But what Zhong'an's trying to get away from is this traditional mindset of a one-off annual expense, an annual premium, and to embed the insurance value-added proposition around their daily life, as Zhong'an calls it, around their internet life, right? So the average customer of Zhong'an buys 10.3 policies. The average number of policies in the Chinese market for the entire insurance companies, they average two policies per customer. Zhong'an has it 5 times that. So a really meaningful approach to how they look at engagement with the customer. The average policy costs $4, quite phenomenal. And Bill Zhong, my very good friend at Zhong'an, the number 2 for international, he sort of summed it up well around the millennials, where he said, and quoting Bill, traditional products can be too complicated and costly to customers. Insurance companies need a new way to reach out to the young generation who are used to living in a connected world. Well, Zhong'an is certainly building that model for that. Here we go. The next lesson learned. This is my personal view, but I've come to really appreciate that Zhong'an, not only do they drive good tech, but they are world-class marketers. Zhong'an is able to satisfy unmet needs, and they do it so cleverly. There's just so much innovation that happens around, product development. And really where they start, and as I've come to understand, as I spend a lot of time with the Zhong'an executives, the words product design are used almost throughout every conversation that they have. And it really drives their approach. So what I really wanted to do is communicate this concept of product design being such a key component to Zhong'an's marketing. And it's product design with partners, of course, and the way they do it around scenarios. And we'll get to that a little further when we look at some of the products offering in a couple of slides ahead. But talking about, product design, I was in a meeting with the CEO of one of the largest cruise lines worldwide, who's expanded to Asia and China. China will, within 5 or 7 years, be the largest cruise market in the world. So there's a lot of cruise lines that are positioning around this market. And we were talking to the CEO of this large cruise line operator. We were talking about how we could potentially add insurance to the mix. Wayne Xu, the CEO of Zhong'an in China at the time, this was before he became CEO of Zhong International, he and I met with the CEO of the cruise line company, and we were talking about, ideas, sort of idea sharing, creating some new approaches that may work for cruise liners. So my friend, the CEO, Wayne Shu, said to him, why don't we think about, in the event that the ship does not sail on time and does not start the cruise at the sailing time, perhaps we can provide an insurance product around that gives them a benefit of perhaps a free drink at the bar or a snack at the restaurant. And the CEO of this large cruise line company said to Wayne and me, why would you want to do that? And Wayne said to the CEO, why wouldn't you want to do that? So it just gives you a real world example of the minds that are at work here in terms of, marketing at Zhong. Here's that slide that I wanted to show you. I'll be happy to share some of these with you after the presentation. But you see where product design fits in. But I think Zhong has done a marvelous job of how they sort of lay out their world from second pricing and underwriting, real-time dynamic underwriting, distribution seamlessly embedded in online applications, claims service largely automated completely, open platform for partnerships, etc. It's just a very cool visual I wanted to share. So here we go. Going back to this, these products and product design, pricing, distribution, claims services. Here's a good one. Shipping returns, as they call it. Zhong developed the shipping returns in an approach with their investor as well as their partner Alibaba. It really covers shipping expenses for return goods. Pricing is super cheap, and it's very many variables involved. The historical return ratio of the buyer. So they've got all this history that they keep and track on an individualized, customer basis. So they run these profiles to see how many products they're buying, number of purchases, and they price it out anything from 12 cents to $4 roughly, USD, of course. Seamlessly embedded in every transaction, again, in the bottom left. Claims services, automated claims online. What they don't say here is that the claim services for these types of products are all parametric driven. They've tied into all the airlines. They know when the plane was supposed to fly, when it actually did fly, and they cut checks as soon as the triggers are hit in the parametric world. Here's another one of flight delay. So I'm sorry, I confused the first one in terms of flight delay when I talked about triggering the parametric covers. But here's the flight delay one. It's cancellation if it's delayed for more than an hour or more. Accidental injuries thrown in there. Again, pricing is rather low depending on the history of the flight delay ratio, right? They've got all these tables and data sets that show certain routes have more delays because of tropical weather in Shanghai in the monsoonal season, etc. And then you can see that the distribution is also seemingly embedded in the flight ticket and the claims, as I was saying earlier, automated through parametric means, payment made as soon as the parametric trigger is hit to land in your WeChat wallet electronically. So the next lesson learned, and the last one, is really about Zhong's international strategy. And here I make the statement that the lesson learned for me is your international strategy as an insurance technology firm may look different. Sorry, let me get that right again. Your international strategy may look different from your home market. And this is certainly in the case. And when you think about traditional insurers, when they go overseas, they generally just pick up the model from their home market and drop it in the new market. But Zhong figured out very early on that's not going to work. And so they constructed this business model. I call it a coexistence model. And the rationale was, why compete as we go over to markets where we don't understand? Why compete with strong rivals in their home markets? Instead, why don't we consider positioning by collaborating with insurers and internet platforms? And this is exactly what they've done. It gives them the opportunity to internationalize existing products and build out new ones. It also leverages the tech stack that we've been talking about too. Recently in the half-yearly review by the CEO of Zhong in China, he made a comment that Zhong will expand to countries and more regions rather. He didn't give anything away. I don't have a sense of where they are going. I think there's a chance that it's going to be another emerging markets. I think one development to watch is SoftBank. SoftBank obviously is an investor in Zhong and many other companies around the world. And SoftBank has a very strong leaning to Latin America at the moment with a earmarked $2 billion worth of funds. Is Latin America the next jumping off spot for Zhong? I don't have a clue, but let's see. And here we're going to talk a little bit more about Zhong's export and technology model, because it's an interesting. We're going to start on the left side of this slide at the bottom. We're going to look at two of the core systems that Zhong has. On the left, all the way to the left, is the finance platform and the Insurtech platform that are separate modular systems that are pointed to internet platforms, right, that they collaborate with, and they build out capability to basically engage with these platforms as partners to market insurance on their behalf. And then on the right side of this one, under insurers, they've brought their core insurance system to market to insurance companies in the region. Zhong for the region is based in Singapore. So on the right side of the slide, 64 contracted customers internationally now, roughly two and a half years of existence. So what you're really looking at is about 30 insurance companies in less than 2.5 years as international customers, and the balance being internet platforms. And geographically, again, Singapore is their base. They operate in, besides Southeast Asian countries of Malaysia, Singapore, and Indonesia, where they have some tremendous relationships with some of the leading internet platforms, Grab, for example. NTUC Income is a marvelous Singapore-based insurance company, one of the largest in Singapore. And then in Japan, they've had a long-standing relation with Sompo, one of Japan's largest insurance companies. So as we wind down towards the second half of the presentation, we're going to take a quick look at what's around the corner. And here we go. We've got this explosive growth happening in mutual aid. Tencent and Ant are the leaders. Ant's Shanghu Bao is translated to mutual protection. Tencent's Waterdrop, and a dozen other competitors. And in just 13 months, you can see that Ant has developed 100 million members. That's the graph on the right. Phenomenal growth, phenomenal uptake. Their goal, Ant's goal, is to have 300 million users on the platform by 2022. Interesting, of late, Swiss Re made its first investment in a startup in China. They invested $230 million in Waterdrop. It's a phenomenal development, surprised most everybody in the market, but a tremendous commitment by Swiss Re to new business models in China. Where to next? We're starting to see some business models around mutual protection in Europe and Southeast Asia. Will other emerging markets follow? Let's see. I'm not aware of any in Latin America. Maybe you are. Be happy to hear that at some stage. What do you think about the mutual protection model? So just phenomenal growth there. Is mutual aid the next big thing for Insurtech? And I would say certainly in these markets, emerging markets where the healthcare infrastructure is still relatively weak, and the financial institutions, read insurance companies, are not yet enabled to offer the right products at the right price. And I think those markets are ready for them. I know it's essentially a peer-to-peer mutual health platform. They're narrowly focused on one product, really critical illness. It's insurance-like coverage for 100 serious illnesses, roughly. Really low-cost protection, roughly $10, $12 a year for relatively minimal limits. Members' fees pay for the claims, sort of peer-to-peer model, obviously. Really disrupting traditional health insurance market, but it's really their own fault too. The traditional market has been slow to offer, meaningful health products in the marketplace. So the other area that's starting to really heat up in the China market is anything related to health. And clearly COVID has had a big impact on speeding this up, but it was already underway, a year or two before COVID hit. For example, AXA pivoted to healthcare as a primary focus about 2.5 years ago. So it was already underway, but COVID just helped propel it. But the real driver here is Asia's protection gap, is 1.8 trillion gap. That's consumers are underinsured or uninsured, and the social safety net is limited. So those are the key drivers. There's been some really interesting stuff happening lately. Prudential's tie-up with Pi Health in a 12-country deal is really rather remarkable. Pi Health, I'm very close to Pi Health. I collaborate with them. They measure physical activity on a digital health app. But one of the more interesting thing about it is it's scientifically proven. Gen Re is their reinsurer, and they have really done a lot of effort, and over 2 years worth of effort by Gen Re, sort of looking at the science behind this model. And it must be working because they agreed to be their lead underwriter globally. So phenomenal company, Pi Health, if you don't know them. AI Life is the former AIG group. They are the largest regional life insurer in Asia. They recently partnered with Regional Wide with Hallmusk, a mental health and health coaching solution. Pretty interesting twist for a traditional life insurance company, but really pulling in, e-services, health-related services, and providing them to the consumer. And Ping An, it's not very well known, but Ping An's corporate venture arm, it's a $1 billion venture arm, of which they've already started. They've invested about 200 million or so far. They are snapping up some of the most interesting health tech companies around the world. So interesting to see the different types of activity around health and insurance in Asia Pacific. Companies to watch, FWD is an interesting one. They're already in 12 markets. They've spent $3 to $5 billion over the last 7 to 8 years, and really growing their footprint. They're Hong Kong-based. Pacific Century's CEO is a very famous Hong Kong billionaire tycoon. Bolt Tech is their new digital brand. They have a separate organization that sort of manages all the new digital efforts for FWD. They're already in some of the key fast-growing markets in Asia: Hong Kong, Thailand, Indonesia, and mainly Southeast Asia plus Japan. They've got a new IPO coming up. It'll be Asia's largest since Zhong. Zhong's was 1.5 billion, if you may recall. And with Forward's IPO at 3 billion, it'll double the size of Zhong's raise. in Hong Kong, they've been the most aggressive in the region in terms of issuing virtual licenses. Really, the birth of virtual licenses happened in China with the establishment of Zhong as the world's first online insurer. And there's 2 or 3 other online insurers in China, but they haven't really done well, surprisingly. But Hong Kong has been very aggressive in issuing virtual licenses. And they're controlled by the Hong Kong Insurance Authority, regulated. They have to, put their products in a sandbox, so to speak, first, test them before they're brought to the marketplace. There's 2 P&C companies here. 1 Degree is to the left. Very interesting startup focused on pet care at the moment, of all things. And the other general insurer here is Avo, or Avocado, as it's fondly called. Both general insurers. Then you've got Zhong on the life side, which we spoke about briefly. Blue and Bowtie are both life insurers, as well as one is a medical insurer. So some really interesting new activity happening there. And we'll see some of these virtual insurer models spread to other regions as the local regulatory authorities allow, right? So the other recent interesting phenomenon last month actually was the marriage of incumbent Aviva with homegrown Insurtech, as I call it, Sing Life for $2.3 billion. What would have happened in the past is that a regional insurer from, let's say, the UK or the US that wasn't getting to scale in a local market. And Singapore is a small market. It's a small population. It's a city-state. It's hard to get to scale, right? So usually when incumbents from overseas have trouble to get into scale in markets, they withdraw, right? But in this case, we've seen the first combination of an Insurtech local and a foreign incumbent join together to become one. And it's an interesting mashup for me. It's the first of its kind in Asia Pacific, and I'm expecting we'll see it elsewhere. And as such, with the influx of new capital, a couple of new partners, including TPG, the investment people, Sing Life has made an announcement that plans to expand across Asia. In closing, I've presented this very recent contribution by a digital insurer based in Singapore. Kudos to them. They've come up with these 2 dynamic Insurtech maps. On the left, we have Hong Kong's Insurtech map. On the right, we have Singapore. I encourage you to play with these 2 maps because they're dynamic. You can click away and get deep inside some of the business models on the individual websites. You're also, by comparing the maps too, you're able to get a sense of some of the different focuses and issues and opportunities that each market tends to see. For example, in Singapore, you can see this box where it says administration and systems, where Zhong sits, right? Where they're enabling and providing software solutions to the local market. You can see that that really doesn't take place in a market like Hong Kong. There's none of these administrators driving, at least, Insurtech administrators driving these markets in Hong Kong. So there's other subtleties too, but I encourage you to spend some time with these dynamic maps. And in your own markets, consider developing your own. I'm sure that the digital insurer people would be welcomed to be approached by some of the markets in Latin America to help them with their Insurtech maps. So in closing, I want to thank you very much to all of you for your time with me today. I hope you've enjoyed the presentation. I certainly am open to contact if in event you want to ask me any personal questions. Once we get through the Q&A, I'd be happy to take them offline. Please take care, be safe, and best to all.
Hi, Rob.
Hey, hello, nice to see you all.
Yes, nice to see you. Thank you very much for your presentation. We enjoy a lot your presentation, and now we're going to talk a little bit with the the chat and with the question of the audience. More than 1,600 people are connected with us for this platform. So thank you very much, Rob. Wow, amazing what is happening in China, in Asia. So the first question is it only locally? So is because there are no regulation about data, about GDPR and something else that is happen these things in Asia, or for you it's something that you can imagine in the future Insurtech from Asia to arrive to land to Latin America. What is your opinion about that?
No, it's a very good question, Hugh. And again, well, once again, thank you for the opportunity to meet the Latin American market through your conference. I very much enjoyed my presentation opportunity to you, and it's great to be with you all today. Yes, clearly there is some component here where, you know, the local market conditions allow you know, this to permeate in a place like China, right, where it's really taken off. Having said that, we've seen, you know, Zhong's model in particular, you know, go to Southeast Asia, be it, you know, its so-called export, you know, model of its technology. And they're applying the same type of, you know, marketing strategy in very, very different markets and different regulated markets. So while clearly I think in terms of a timing issue and the mobile first and China, you know, moving really right from, you know, cash to a cashless society with no credit cards, no other, you know, means to use anything but cash before mobile technology allowed, clearly they've seen a much higher leap into usage and acceptance. But, and I've seen it beyond Southeast Asia, even in the US, where large internet platforms have borrowed learnings and activities from Asia, and not necessarily just in Insurtech, but also across other financial services.
Yes, yes, I agree with you, yes. The second point, I think that is very interesting, is about peer-to-peer insurance, because
right.
The mutual platform, because you know that in the past it was a potential disruption, and after a long time, Insurtech, peer-to-peer Insurtech wasn't a hot topics. And now with Zhong Hubao and Waterdrop, it's amazing. So the point is, do you think that there exists a good future for the peer-to-peer Insurtech? In Latin America, we have 3 peer-to-peer Insurtech, Wisura in Colombia, Mutual Punto Life in Brazil, and Comus in Brazil too. So do you think that there is a potential disruption for the health market?
Yes, in fact, you know, from the very beginning of the arrival of the so-called peer-to-peer or mutual aid platforms in China, I began an interest in mutual insurance. Yeah. And what really attracted me to it, you know, in the beginning, especially as it went, you know, international, is that if you look at the growth, actually the growth in mutual insurance, the traditional mutual insurance is very much alive and well. And it's a little known fact that mutual insurance across the globe accounts for 27.1% at last time I looked of total insurance premiums. So it's already a very sizable market, right? It's huge, and it's popular across the globe. There are different variations, and I think one of the reasons why, you know, it's going to be especially effective in some of these other markets is that you're able to take these learnings from not only traditional mutual insurance, but the new mutual aid platforms. But even in Southeast Asia, they have this Sharia concept, right? It's about Muslims, right? And so there's a lot of learnings to be made from various different markets. And as you suggest, they're starting to come together in different regional markets. So I am quite excited about mutual insurance. Yeah. You know, there's some growing pains associated with it, as you can imagine. You know, the regulators need to get involved, as they now are in China. You know, you need to have, you know, the right types of products and services. I think particularly now, as you suggest again, is that the timing around health products in particular, especially in this time of COVID, lends itself to that product line, really well.
Yes, I think it's a very good thing in order to attend the underserved people, people with very low income, and in order to cross-sell or to upsell afterwards. But I think it's a very good thing because in this case, insurance is not a financial product. It's some things to help and to collaborate in every people with a very deep purpose about to cover people that need about. So I think it could be a very great things. A mention
and one more addition, if I may, just close one other point. And it's quite interesting that it was a foreign Insurtech in Shanghai that actually created the concept of peer-to-peer insurance in China. And it was actually the Chinese that borrowed it from a European startup, actually. So the idea was actually it was born in China, but not necessarily conceived in China.
Yeah, perfect. Yeah. Okay. Okay. I'm receiving a lot of questions. Other topics. You mentioned you are the creator, the inventor of a word that is Insurtech. So the Insurtech in the financial world, what is about? Is it a real trend today? Because we observe a lot of fintech in order to move from fintech to Insurtech. And the point is, from Insurtech to fintech is the trend in China or in Asia?
Yeah, no, it's a very good question again. And, it's not a concept that's taken hold quite quickly. And I don't necessarily think it will. But one of the key drivers, of course, are these ecosystem models, right? Where you see these large platforms, getting back to my presentation, relative to like Ping An, from insurance, to banking, to 4 or 5 other segments, right? So they help drive it. But to your point, I think we're going to see some different models develop in different markets. So, for example, and I'll go back to Zhong, because they now have 2 virtual licenses, which I mentioned. One is a virtual bank, and the other is a virtual life insurance, right? And one of the largest and probably one of the more traditional, opportunities around FinsurTech in Asia Pacific has been bank assurance, traditional bank assurance, which we see around the globe, right? We see it in Latin American markets, we see it in European markets. If anything, it's probably the weakest in the US, honestly, but it's huge in Asia too. So you see these virtual licenses coming together in the insurance and the banking space. And to me, that's a signal and possibly a sign that, these new models with the new technology and then leverage and create much more efficient, markets for FinsurTech, right?
Yeah.
So that's one of the thoughts I have. And I'm starting to see that start to move too. And I think Zhong could well be the pioneer there again in pulling together its virtual life license and its banking license into a new bank assurance model.
Yeah, okay. So before the last question, thank you for mentioning the maps of the digital insurer, because the digital insurer, and I say hello to you, Terry, that is doing an amazing job in Asia and in the world. And we are helping us for this event. So thank you very much for the digital insurer. And I know you follow the job of you, so it's very nice. A question from my friend Martin. Thinking forward, can incumbents fight this fight, or they need to have strategic alliance with new digital native companies, or what is the recommendation for traditional incumbents?
Sorry, could you please repeat the question? I missed it.
Yeah, sorry. Thinking forward, can incumbents current fight this fight, or they need to have strategic alliance with digital native? So what is about?
That's a very good point, and I think the answers have not yet reached us, but they're starting to present themselves in some places. And I look towards the example which I referred to in my presentation, where you had Singlife, a 6-year-old startup, basically take out Aviva and end up with 75% of the company with some terrific investment by private equity, which really enabled this. But here is, a very small but fast fish chasing a very big fish, and it swallowed it, or maybe other description for it. But I think we're going to see more of this, especially in markets where incumbents cannot get to scale. Because we know, and you've seen it in Latin America as well, when companies can't get to scale, and they tend to be foreign internationals, when they can't get to scale, they leave the market. And what Aviva has done is said, we don't want to leave the market, we just can't get to scale. So then they flip the switch. And now all of a sudden they're partnering with the Insurtech that gives them a new path. So I believe we'll be seeing more of it.
Okay. So sorry, a last question. Sorry for your time, but a last question. Because you know that last Wednesday we received Mercado Libre. Mercado Libre is the big tech in Latin America.
Yes, of course.
$16 billion of market value. And we've talked about the entry of Mercado Libre in insurance. And today, you've talked about return shipping insurance in the case of Zhong. So for you, do you think that this product, this micro product, is a good product, for example, for e-commerce platform?
No, it's a very good question. And as we know, all markets are local, right? And so, for example, in the US, it's been trending, but most large, internet platforms that are involved in e-commerce will allow returns to happen for free or very nominal cost. And that doesn't happen in China. Even though the costs are quite low, it still doesn't happen. So I think it depends on a market by market basis. And so it's hard to say, and I don't know where Latin America may fall in this, but clearly this concept has moved to Southeast Asia, where there is return shipping starting to appear. And additionally, what we're seeing, because we know the world is becoming even more, interconnected, right? And with the advent of cross-border e-commerce, right, where we've got individual buyers buying from China, and we've got Chinese buyers buying through e-commerce, sending stuff to China. So in those sorts of situations, I think there's more of an opportunity in cross-border return shipping than perhaps there is in a domestic way, if you will.
Okay, so thank you very much, Rob, for the audience. If you are interested about Asia market, Chinese market, please follow Rob Collins. That is a very huge influencer. We know a lot about, or for example, the other guy for India market, Rahul, that is
my good friend Rahul.
Yes, your friend. I know that's your friend too. So they are guys that know very well this market. So please follow them by LinkedIn. And before the end, I'm going to ask for Matthias to connect. Matthias is our partner for this event, and we will close this event. Sorry, Rob, but we will talk in Spanish for our audience.
No, that's fine. It's been a pleasure to be with you all, and be well and safe.
Yeah, thank you very much for being with us.
I just want to say, Rob, that it was amazing your speak. I just cannot be more than astonished. Thank you so much for sharing your experience and vision. So one more time, thank you so much. I hope we can learn from many other experts like you and boost our ecosystem in the near future.
Hey, thank you again, and best to all. Take care now.
Thank you, Rob.
Bye-bye.
Bye.
Bueno, Matías, vamos ahora a hablar en español. No sé qué te parece, pero ahora para ir cerrando un poco esta semana, que fue una semana intensa, pasó de todo, y nada, no sé qué opinas. ¿Cómo quieres cerrar esta sesión?
La verdad que, no lo sé, impresionado por la charla de Rob, toda una carga tremenda de innovación, súper impactante. Tuvimos una semana impresionante, tocando temas desde paneles en Brasil, paneles de CEOs el lunes con Guibert, panel de mujeres que fue también súper impactante, la verdad, y no me quiero olvidar de ninguno de las asociaciones, todos estuvieron increíbles y llegamos a todos los rincones de Latinoamérica y más también. Así que estoy muy feliz. La verdad que quiero agradecer a toda la audiencia que nos acompañó a lo largo de esta semana, con casi o más de 1.700 inscriptos.
Wow.
Impresionante, la verdad. Y nada, quiero agradecer también a todos los sponsors, a las asociaciones, las cámaras, los media partners, todos los que nos acompañaron y nos apoyaron, los speakers que también, bueno, fueron convocados para que nos compartan todo su conocimiento, y así fue, y brillaron. Y tampoco quiero olvidarme, obviamente, del equipo detrás de toda la construcción de este evento, de Digital ante vos, que sos un genio, mi amigo, y también a todo el equipo de SMS, a Rodrigo, a Axel, Nati, Juan, a todos. La verdad que súper contento. No sé cómo lo terminás vos.
No, perfecto, me parecen buenas palabras. La verdad que para mí también un placer a ver si logramos a que todo el mundo se junte con nosotros. La verdad que quiero agradecer realmente a todo el mundo desde México. Tenemos apoyo muy fuerte en México, en Perú, en Ecuador, en Chile, en Argentina, en Brasil, nada, de todos lados. La verdad que para nosotros es un placer. Sobre todo escuchar comentarios positivos de la gente que admiramos. Yo sé que vos también, Mati, hay un montón de gente que admiras y la verdad que para nosotros es un placer. Uh, nada, yo termino un poco impactado, con mucha información. Me perdí la mesa ayer de las asociaciones porque no tenía internet. Entonces, este fin de semana, y les invito a todos, conéctense este fin de semana, tranquilo, en la cama o lo que sea. Mírense un poco lo que se perdieron. No miren todo, miren solamente lo que les guste, lo que les interesa. Creo que viene un mundo apasionante, está pasando de todo, la verdad. Y nada, lo único que yo invito a toda mi audiencia, y ustedes lo saben, no se vuelvan el lunes a la oficina como empezaron la semana pasada, porque yo creo que tenemos que ver la película y la película avanza rápidamente, muy rápidamente. Estamos acá para apoyar, acompañar y nada. Y también tenemos un mensaje de la producción que dice, no tenemos que olvidar que hoy terminamos con la mesa redonda de Juan Mancini de Celent, que es sponsor nuestro, que nos va a hablar de justamente construir o vamos a decir modificar o comprar un sistema core de su empresa de seguros. Me parece que obviamente que Juan Mancini es uno que más sabe de lejos en Latinoamérica sobre esta temática. Júntense en la mesa de Juan, van a aprender un montón. Nada, te dejo la última palabra. Gracias a vos, mi amigo, y también a la producción y a todo el equipo, y vamos a ir a descansar un poco.
Nada más, está todo lo dicho. Solo recalco eso de que tienen 30 días para continuar viendo el contenido que les impactó, que lo quieran repasar. Tienen 30 días para continuar con la plataforma. Así que nada, muchísimas gracias y ya los estaremos esperando en la próxima edición, en todo lo que vayamos haciendo en el medio también, los vamos a ir comunicando. Así que nada, muchísimas gracias a toda la audiencia. Nos vemos.
Chao, nos vemos.
Adiós.